Hello and welcome to Macros with Mythili, where we take a hard look at all the major macroeconomic developments in India and overseas. Over the past 52 weeks or so, we've brought you some of the best brains on all that's occupied center stage in the economics arena. But this week, in a departure from past practice, we're going to look not at events gone by, but at the future. We're going to try and read the tea leaves for you with two of the most respected and seasoned experts in the economics arena. Dr. Shankar Acharya, a key policy maker who was at the forefront during the initial phase of reforms in India, and Chetan Ahya, Chief Asia Economist and Managing Director, Morgan Stanley. Welcome to the show, Shankar, as well as Chetan. Shankar, if I may start with you, what to your mind is the single biggest development or the single biggest developments that really epitomized 2014? And what do you think is really going to define 2015?
It's very hard to pick one thing, Mythili. You always make it very difficult if you ask that. But I think I'll pick two or three things and then you can knock a couple of them out. I think the shale oil revolution, oil and gas revolution, came into its own in particularly the North American continent, and that had, I think, tremendous consequences for the global oil market. And along with other factors, of course, it led to this extraordinary decline in international oil prices that we have seen from somewhere above $100 per barrel to somewhere around $60 a barrel today. Secondly, I would say another thing that sort of came into its fruition, if you like, is the slowing down of the Chinese juggernaut. It's still going at a pretty decent clip, but it's not growing at 12%, it's more like 7%. Third, I think we were all around the world probably disappointed by the flatness of the recovery or lack thereof in Europe and Japan. And finally, of course, we had these sort of upsurges in geopolitical events, in West Asia, as well as in related Russia.
Shankar, what do you think that one or two most defining events will be in 2015?
I suspect a lot of this will actually continue, the consequences of this. I don't think one year after another has neat watersheds like that. So, for example, I think that you will continue to see subdued global growth because of some of the things I mentioned, such as the Chinese slowdown, such as the flatness of European and Japanese economies, and of course what's going on in Russia. If you want one other kind of overall feature of what's been going on, it's really, I think, the end of the commodity super cycle, which has sort of dominated or at least been a major factor in the global economic scene for the last almost a decade, I would say. And I think we saw the end of it in 2014, and I really don't see a renewal of any upsurge in the commodity price cycle in 2015. And of course, the other big thing that didn't occur in 2014, but probably will occur in 2015, is you will see some tightening of US monetary policy. That is, you will see some increase in policy rates, probably in the second half, but I'd be most surprised if it doesn't happen at all.
Chetan, would you agree with Shankar's identification of the key things that really defined 2014 and are likely to define 2015 as well?
Yeah, I think I broadly agree with Shankar, and if I were sort of nail it down out of the things he mentioned, I would describe two key forces which will be critical to watch in 2015. The first one is that we as a house, and even personally, I believe that the world has deflation risks. This fall in commodity prices, including even oil, to me as a guy who practices macro, I see that there is a demand problem in the world effectively. And very often the commodities sector analysts will describe this and tell you that this is a supply side issue. Honestly, bulk of the inflection points and deep direction changes in commodity prices in the previous cycles have always been driven by demand. So to me, that actually adds to that concern of deflation risks in the world. And the second thing is about the monetary policy point which Shankar mentioned about in the US. And I think that would be an important one to watch. We have seen a very different cycle emerging in the US now compared to many, many years. In the past, what we had seen is only in the 90s is when the US lifted its real interest rates. Along with that, the dollar was rising. In the 2000, when US lifted nominal rates, it actually did not work enough on real rates, and we had the dollar which was weakening. So for us now, it's a big, or particularly all emerging markets, it's a big shift which is happening where the US real rates are rising and US dollar is rising. So that is the second thing which it's played out already. It's affected a lot of emerging markets, including India last year. But going forward, the process of normalization of US monetary policy has just begun, and that will continue to weigh on us as well as the rest of the emerging market space. So these are, I think, the two big forces that we are tracking in terms of its implications on the rest of the world.
And as far as geopolitical tensions are concerned, Chetan, you think that's not a big worry going forward?
Mythili, it is always a concern, but it's hard for us to put a number to this or try to predict this or build it into our model. So unfortunately, at least from the seat that I come in from, I just leave it as an unpredictable variable, and you can't be prepared for it.
Absolutely. There's nothing you can be prepared for in today's world. But Shankar, both Chetan and you, I'm a little intrigued. Almost all the factors that you identified are essentially overseas. Does that mean it's the external world, it's a global economy that is really going to have an overriding influence over everything that happens in 2015?
No, I don't think that's, if you're meaning the consequence or what will happen in India, if that's the focus, I wouldn't put it that way at all. I thought you wanted us to talk about the global economy first, so that's what I did and that's what Chetan did. But I think if you want to sort of turn, if you like, the angle of vision to India or from India, obviously the global factors that we've just talked about will continue to constrain what India can do. And in one important sense, I would say that both in 2014 and probably in 2015, basically, the global economy, in terms of growth at least, has not been supportive and will not be supportive in terms of global growth. The one area, of course, where one has to qualify this very strongly is commodity prices, including, of course, oil. And there, the key issue is, are you a net importer or a net exporter? And I think as we have seen in 2014, those forces, if they continue, as I think they will in 2015, basically as a net importer of oil, countries like India will, on the whole, benefit. I mean, I say on the whole because it's sort of a net-net kind of thing. On the other hand, if you look at the BRICS as a group, clearly two big losers or three big losers in this, because of falling commodity prices or reversal of commodity prices, are going to be Russia, Brazil, and South Africa. And you can think of other developing countries where also, like Nigeria and perhaps Mexico, where the decline in commodity prices is not going to be so friendly. But for us, it is on the whole a positive, which will help.
I'm afraid we have to slip into a very short break at this moment, but we'll be back very soon, and we'll continue the discussion on what are the worries about India as far as India is concerned. Welcome back. You're watching Macros with Mythili, and we're trying to read the tea leaves for you with two very eminent economists, Shankar Acharya and Chetan Ahya. Shankar, before the break, you were telling me about what are the worry spots as far as India is concerned. So what do you think is really kind of getting you anxious about India in 2015?
Well, three or four things, Mythili. One, I think that the continued weakness in the fiscal situation, and in a sense the failure to take advantage of, from the fiscal point of view, of the windfall benefit that we had because of the very sharp decline in international oil prices. I think government should have been a little more proactive in tucking away some more revenues from things like excise on petroleum products and so forth. They did a little bit of it, but they could have done more. Just to put it in context, if prices in this year coming forward, 2015, continue to average somewhere around $60 a barrel, which is possible, as distinct from over 100, closer to $110 a barrel, at least in the first half of 2014, we are talking about, on an annual basis, savings on the balance of payments of, I think, something like $60 billion plus dollars, maybe $70 billion. And that, if you translate it into rupees crores at today's exchange rate, we are talking about nearly 400,000 crores. So now, I think, given that windfall, government, in a context of fiscal weakness, should have made a stronger effort to get more of that windfall into the public coffers. They did a little bit, but not enough. So I think that is going to continue to be a problem, and this ties into the critical area of infrastructure, which has been a bane of sort of in the Indian economy for many years, of course. But while for a period in the last few years we had a lot of this, the PPP model seemed to be working, and a lot of infrastructure got built through that model, or versions of that model. That model now seems to be, some people say it's broken, some people say it needs a major repair, whatever. But the fact is that the private sector companies in infrastructure today are hugely over-leveraged, and therefore are not in a position to build more, or even to actually run the things that they've built. And as we know, the government doesn't have the cash. So, the weakness on our fiscal thing feeds into the problem of infrastructure from the public sector side. Another area that I have worries about, again coming out from what's been happening in the last 2 or 3 months, is whether the new government, the Modi government's commitment to economic reforms, which I think is genuine, may get derailed politically in Parliament and so forth, as we have seen in the last couple of weeks, by if you like, the social issues, things like Ghar Wapsi and Love Jihad and all these things, which may not be being propagated by government, but fringe elements or not so fringe elements which are associated with the ruling party don't seem to be under control, and these are leading to a backlash, which in political terms is occurring in Parliament, in the Rajya Sabha in particular, and which are stalling, as we all know, various reform initiatives on the economic side by the government. And another dimension where I think everything is related to everything, but another dimension is, of course, the public sector banks' balance sheet weakness, which I think continues to be a problem and will continue to be a problem in the years ahead, particularly as we have to move to Basel III over time. And finally, we've taken so far in all of 2014, we've been quite comfortable with the external balance of payment situation, and obviously so, because from a current account deficit of nearly 5% of GDP in the previous year, we're expecting it to be around 2% in the year about to end in March. But I think we should be alert to renewed pressures coming from such areas as remittances from abroad might slacken because of what's happened to oil prices, and those therefore the people in the Gulf and so forth will send less money back. Secondly, exports have begun to stagnate in the last 2 or 3 months or more, and I think that's to do with, in my view, an overvaluation of our currency, which has been allowed to happen. It could have been managed better. The renewed surge in gold imports, which we saw last month, perhaps related to the the return to the more liberal gold policy. And of course, if the economy does pick up, then the surge in a potential surge in non-gold imports might come again. So, unless we have a firm, sustainable earning side on the external accounts, on the current earning side, I always, perhaps I'm very old-fashioned, but I always do continue to worry about the external finances.
So, Chetan, do you share Shankar's worries, or do you see some bright spots? I know you even worry about the public sector balance sheets. So, is that also a big worry for you, or do you see some bright spots?
Mythili, I would like to always address this question in the context of what we think is the fix needed. It's always easy to list what is wrong with India because, there's always a long list we can have because we have so much of sort of, structural issues in the country. So I think there are two components in which I would like to approach this. First is what are the cyclical issues and what are the structural issues. So from a cyclical perspective, India has achieved 6.5% GDP growth for the last 25 years. And the reason why we are not even doing that is because four things went wrong. I think everything else is secondary. These are the four primary important issues. First was high fiscal deficit, particularly government expenditure growth, which was quite high while they were running high fiscal deficit. Second is rural wages. Third is negative real interest rates. And fourth is dysfunctional executive, or call it the executive branch, nearly shut down, not approving any investment projects. Now, all of these four issues have been addressed. So to this extent that they have been addressed, we do see growth recovering to 6.5% and inflation going to something like 6%. If this is what is done, then we can be assured about the cyclical recovery. So I have less worry about the cyclical recovery from the domestic side. From the external side, in terms of the risk to this is, one is, as Shankar mentioned, the exports. Exports to GDP are 24%, an important part of the recovery process. We are assuming exports to grow on a dollar basis at about 8-10%. If that turns out, this 6.5% GDP growth rate is achievable. If it doesn't, then that's the risk. And to the extent to which last 2-3 months data have shown some volatility, there is some risk emerging to that. And then the second risk is really what happens to this EM contagion risk. As we discussed in the first section, we are concerned about what happens to EM when the US monetary policy further tightens. And so that is having an impact on other emerging markets. And that contagion, if it were to come down again to our doors, that will be the second risk to watch out. But I think more or less the cyclical recovery is more secure from domestic side. Now on the structural front, if you want to go above 6.5% GDP growth rate, then that's where some of the things which the government is talking in the context of Make in India needs to be fixed. And we are seeing progress towards that, and I think some of it is less visible in the sense that they are not big bang reforms, but in my conversation with the bureaucrats, not just the ministers, I am sensing that there is a lot being done in terms of the changes related to the processes of investment approvals and how we deal with the private sector and how we build this institutional capability to deal with the private sector without having too much corruption. So I think that is a critical factor that we are watching. If that doesn't pan out as they are trying to do, then that would be the risk to achieving growth rates higher than 6.5%. So that's how I would like to approach this, Mythili.
Yes, Chetan, there are a lot of little things that are being done behind the scenes, but it's essentially a work in progress. We'll have to watch out and see what the results are. But on that note, I'm afraid we have to slip into another very short break. But please do stay with us. We'll be back very soon. Welcome back. You're watching Macros with Mythili, and we are trying to read the tea leaves, try to peep into 2015 with two eminent economists, Shankar Acharya and Chetan Ahya. Shankar, if I were to ask you, do you think the budget 2015 can really be a game changer? So many expectations are being built on it. Given the kind of problems and the challenges we face, can that single budget be a game changer?
I'm not sure. In a way, the way I see it is more that the last budget was a lost opportunity, because that was a chance where government could have sort of said, look, we're in a mess. Problem was not with us, it was the previous government, and therefore we can do some tough stuff. And that we'll have a higher fiscal deficit and not hide it and that sort of thing. I think they sort of lost that opportunity now. This time, whatever they do, you can't blame the past. At least politically you can't. And I think they're caught between the fact that we have a narrow revenue base, and this is one of the structural factors I would suggest, and on the other hand, thanks to entitlements and so on, you have a wide expenditure base. So you're always having to struggle to fill that gap. And I think this budget, from that purely fiscal point of view, will continue to face that struggle. So it's difficult to be a game changer in that. You can just struggle to sort of present something which is halfway reasonable, acceptable, and not too and let's say credible. In terms of, I think actions which, it doesn't matter if they're taken in the budget or outside, but actions that need to be taken soon in the cycle of the budget and so forth, we know what they are. One of the important ones, of course, is moving away from these very messy, corruption-ridden major subsidies on food, fertilizer, oil, and so forth, to a much more direct benefit transfer system. Now, that will happen at different paces, hopefully, in different areas, but I hope it happens, because if it does, I think it will have not only welfare benefits, but also fiscal benefits in terms of saving money, and which will make the expenditure side much more containable. I think this, I've already talked about the reforms matter. I mean, reforms other than moving to direct benefit transfer. You know, until we do some things, whether through legislation or rules changing or whatever, on reducing the rigors of the recent Land Acquisition Act, as well as generalizing on the Rajasthan labor reforms, it's hard for me to see how you'll have a strong and sustainable surge in manufacturing and industry that we very much need. So, is it a budget matter, not budget matter? I don't know. The point is, it should be done, and sooner it can be done politically, the better it is. Now, the politics is the key there. Lastly, interest rate decline, which I think we are going to see now. I think Chetan hinted at that too, in real terms as well. I think that is probably a reasonable expectation, but again, it's not too obvious to me that it's a budget matter per se, but timing of it could be around the time of the budget. So that's how I would answer your question.
Okay. Chetan, very quickly, if I were to ask you, do we have too much hope riding on a single event, the budget? What else can we look forward to in 2015?
I think yes. I think a part of the blame is on people like your channel. You know, you guys rev it up so much that this budget is really the biggest thing on earth. But I do think that budget has limited role. I agree with Shankar on that completely. Broadly, I think you know, fiscal policy role in this cycle now is got to be the one where it continues to be well contained, and you don't take the fiscal deficit higher. So that to that extent, the hands are tied up to use the fiscal policy and the budget. But it's the other complementary events which need to happen. One is that the monetary policy easing, which needs to happen, which will happen as inflation is coming down. And second is the government's effort to, you know, remove all the clogs in the wheel to revive the investment cycle. So the big thing now we need to ensure that we continue to have a sustained recovery is a robust capex cycle. So in that, I would think budget particularly has directly minimal role to play, except that the finance minister can announce some tax incentives for trying to get initial part of the capex going. But honestly, I'm not a big believer in it. So I think I would rather look out for measures outside the budget. One is, of course, land acquisition related amendment, which is absolutely critical, because that's something which we did reverse in from where we were in 2004 to 7. And second is labor policy. These two are critical, and tax reform is already happening. GST is going ahead. So land and labor will be the two other things which need to be fixed. You know, they can give a big picture plan in the budget or do it outside the budget, but that's the focus that we have.
Absolutely. So in many ways, we are between a rock and a hard place, but by and large, there is still hope. Thank you so much, Shankar, as well as Chetan, for joining us and giving us your perspective of 2015. And we're going to have you back in December 2015 to see how far you are right or wrong. Thank you so much for being with us. Thank you also for watching Macros with Mythili. Thank you for being with us the past 52 weeks. But we'll be back next year with yet another edition of Macros with Mythili. Thank you and goodbye from all of us at ET Now.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.